Hi and welcome to the market view for Tuesday the 1st of July 2014. Starting off with the 30-minute chart, we can see yesterday the market started to trade higher there and gave a sell signal before moving lower sufficiently enough to actually fill the trade. However, after being filled, we can see we have a green bar here, and when the market goes through the entry price and it's followed by a green candle and some buying coming into the market, which we can see here, then we have to do something about trying to reduce the loss. So as we've seen many times before in the market view, a 50% extension, or 100 if you want to let it breathe a bit more, will mitigate some of the potential loss that could happen. The market shows a second and then a third green bar there as well, and the market fails to take this trade out at this point and then moves lower for 3 bars. We see the buying coming in with the red candles, which is consistent with again alerting us to some potential buying coming into the market. We're also down at the low of the previous day as well, but in the background of this market, just as we have with the Dow, we know that we have a bull market in progress, so the upside being the better side. So we see this buying coming into the market. There is a way of actually dealing with this. When you get this buying here with the red candles and green volume bars, you could have actually moved down to 50% of this bar if you'd so wished. At the moment this shows around a 14 pip loss, but coming down to this one, I'm just clicking the right place, get the tool there. So on this bar, this would have reduced it from 170.21 down to 170.15 there, so a 6 pip loss if you had read the volume there coming into, or the buying volume coming into the market at this point. The market then finds some buying coming in, and we can see prices driving higher. We have a buy signal. We can see that it's greyed out, it's unqualified, and that's purely and simply because the market didn't fill it until the 4th bar, which is a shame really, because then the market went on to make over 50 pips on this trade. It's just unfortunate, just out by 1 bar there. So that was a shame. But in the bigger picture, if we have a look at the daily chart, we can see the market driving through the 76% of 170.03, trading up to 171. So where does this fit in the grand scheme of where the British pound is currently trading with what's happened in the past? Well, this is a monthly chart of the British pound, and we looked at this in last week's market view. And you can see here that we had marked up 170.44. You can see the market's broken through this now, and the next upside target is 179.20 for the British pound as we head back towards the 2008 highs of $2 to the pound. It's taking a bit of getting going, but we may actually see some sort of acceleration as prices start to move higher and playing catch up, because if we go back to 2002, 2003, you can see the same thing there where the market traded back up to the $2 to the pound. And if we go back before then, we go back to 1991 when Norman Lamont had his problems, and it cost us all a few quid when Soros sold the pound into the market, and we saw that massive drop there. And then it took a few years before we started going back up to the $2 per pound level. But there you can see the bigger picture of where we are with the pound versus the US dollar, and the sort of distance we've got to go yet to get back to the 2008 and 1992 highs. So moving back to the current picture, there's nothing really I can mark up as far as this is concerned. There's only the downside really. If we have a look at drawing in, it's only going to be from the bottom of this bar as well. It's going to bring us back to yesterday's fib number. We haven't got anything else to draw off at the moment, so all we can do is use the up day yesterday and then do 76 and 62 back off the height of this bar, but that's where the market's likely to find support. You can see that's at the 170 50 area of support there. Moving on to the Dow, yesterday a quiet day as the market is stuck in a bit of a sideways range at the moment, and you can see this here. We've got a sideways day, the market opening, trading back up, and then some selling coming back in and moving prices to the downside. One thing I forgot to mention in yesterday's market view was the volume here for Friday. You can see how the market was bought back up here during the Friday session, which is unusual. It's a big spike in the volume there compared to any other day. So there's some definitely a distribution phase going on where they're trying to hold the market on the highs. Bit of downward pressure yesterday. The market still has to take out this 62 and 76 if it is going to move higher as well. In the implied volatility, yesterday we saw this turn around and move back to the upside just slightly, ending there at 873, and you can see both in the chart there just sideways to higher finding support as well. So that's really it apart from the news. Let's just have a quick look. I nearly forgot then. Let's see what we've got out today. We've got GBP. We've got manufacturing PMI out this morning at 9:30, and also ISM manufacturing PMI from the US at 3 p.m. So that's all there is today. So there's no resistance around today. The markets could move higher, or we could see the market breathe before continuing to move higher. A lot depends on the manufacturing figure that's released later on this morning. Well, that's it for today. As ever, thank you for your support. It's very much appreciated. All things being equal, we'll get some decent move again today, but this time actually be able to take part in it. So fingers crossed there. All things being equal, see you tomorrow. And as ever, thank you for watching.